podcast with Shyrell. How are you, Shyrell? And here we go with a topic that I want to learn because it's a lot of people don't know. What's the difference between an LLC versus an S corp, and which structure saves you more in taxes? So, Shyrell, what's the real difference between an LLC and an S corp when it comes to taxes?
Oh my goodness, a lot. Huge. A lot of people are terrified of the self-employment tax. First of all, let's get one thing straight. Just because you're an LLC sole proprietor does not mean that you are not paying into your Social Security. People get terrified. They think, oh my gosh, if I don't get a W-2, I'm not going to pay into my Social Security. I'm not going to have Social Security when I get old and retire. But that's not so. That is what that big whopping 15% self-employment tax is for. And first of all, remember also when you're a limited LLC, let's remember what that means. Limited liability company, not corporation. That's what an S Corp, C Corp is. That's corporation. When you're a limited liability company, now you are a separate entity from yourself. See? And now if you get sued, your company gets sued, not yourself. Understand? Does that make sense?
Yeah. So it's so
Okay.
important not to be a sole proprietor, that's for sure. But what you're saying with an LLC is you and an S corp, you're not going to be paying for Social Security into Social Security. But if you're an LLC, you would, unless you structure it where you pay yourself a salary as an S corp, a certain amount.
Exactly.
It
Well, you
depends
have,
on your revenue in a lot of ways, and we'll kind of
yeah,
go into that further.
right. Yes.
But I guess people don't know that. They think, oh, I got to be a sole proprietor to be able to be paying my self-employment tax.
Yes. A lot of people think that. And you do. You need to be a limited liability company, sole proprietor, single member, LLC. That's where that self-employment tax comes in. When you're on your own and you have no partners, you have no corporation, that's where that self-employment tax comes in. We do that Schedule C. That's your income, that's your taxes, that's all your expenses on that Schedule C on your 1040. Now, when you're a corporation, you're going to have an 1120 tax return and a 1040 tax return. Now you have just created yourself more expense with your sole your S corp or C corp, because now you have a corporate tax return that has to be done along with your 1040 tax return. So now you've created yourself two expenses. Also, when you're a corporation, someone has to run that corporation. So there has to be a president. So yes, you have to pay yourself. So now you've created yourself more expense by having to do those tax returns for your 941s and your 940s. So now you have to pay in, and now you created yourself a lot more expense. When you're just an LLC, sole proprietor, there's one tax return. All that goes on one tax return.
It
So
only makes sense when and we'll talk about this. How does self-employment tax hit LLC owners different compared to S corp owners?
So S Corp, obviously, if you're an S Corp, then you're going to be a W-2. So you're going to claim whatever married filing joint, you're going to claim those types of things. You're going to make sure you're tax exempt. Maybe you are, or maybe you're not. So that's how that's different. With the LLC, you're 15%. You got that SE Corp, that's SE tax. With your corporation tax, now you're going to pay yourself a salary. Your corporation is going to run through all those expenses and things like that, and you're going to be salaried. You're going to pay your taxes on your salary, not the entire income for the whole company. So that's the huge difference. You have your salary tax, your 941 tax. You're going to do you're going to fill out your 940 and do it that way. I know this kind of is like, what does all of this mean? So
That's
in
why
other
you got to
words,
contact Shyrell today, but this is great information.
exactly.
At what income level does switching from an LLC to an S corp usually make sense?
When you're running anywhere those six figures, when you're starting to hit six figures, it's probably time to change up to a corporation. So I tell everybody, when you're starting business, think of a business like a person. We grow, we eat, we drink, we have to use the restroom. So there's things that a business needs, just like a person. You grow up and you retire. Business does the same thing. You start out sole proprietor, LLC, start out small, so you don't have to do any kind of employee taxes. You don't have to have an employee. You run your business by yourself. Once you start, those expenses are going up, your income is going up, then that's when you're growing up. Make sense?
It definitely makes sense. What are the risks or downsides of electing S Corp status too early?
Too early. Yes. Whenever you start too early, like I just said, when you're just by yourself, if you start an S Corp too early, again, you've created that 941 where you have to do those tax for your employee, which you are your employee. So now you have to do those tax returns for the state. You have to let the IRS know how much you're paying your employee. So that's the difference. You've created yourself more tax work, more forms. There's a form for everything when it comes to the IRS and the government.
100%.
Yeah.
And then I just didn't.
Fill out, then you're going to be in a big mess. So let's make sure we fill out the right forms, and let's make sure we grow up when it's time to grow up. Start out small. Not everybody has a dad they can borrow $1 million from and start their business and be a corporation just like that, right on the bat. So let's start out small, grow up as we grow. And that's what I tell everyone. Once those expenses and that income starts growing, that bank account is getting bigger, the investments are getting bigger, that's when you definitely need to be an S Corp, C Corp, whichever one. Talk to your accountant, Shyrell, about that. So don't just start out big.
How
That's
does
not
it, yeah, yeah. So how does an S Corp change the way owners pay themselves? Salary versus distributions.
so salary, like I said, again, you're going to be a W-2 employee. If you want distributions, well, that's completely different. You're going to have a K-1 and you're going to distribute a certain amount of the income from the business to that. So do you want to be an employee and pay yourself a salary and then distribute income at the end of the year? So huge difference there. I tell everyone, if you're going to be an S or C Corp, make sure your salary that you pay yourself makes sense, because the IRS, they're pretty smart. They know if this income coming in for the owner makes sense for what the salary is should be paying themselves. Does that make sense?
Yeah, if they give themselves a really low salary, then it looks like they're dipping into the business and not telling.
Exactly. Embezzlement, tax fraud.
Yeah, just speaking, so, and we're going to have another topic later this month regarding the IRS, because things are changing the way
Yes.
IRS is working. And it's a weirder way, in a way. I think it's better way, but hopefully it stays that way. What mistakes do small business owners make when choosing their structure?
A lot of them I see, first of all, like we're just now talking about, they choose the S Corp, they choose corporation when it's not time, too early, like you said a
Hmm.
while ago. They try to include things in their expenses that really should not be included in their expenses. So they're double dipping expenses. So that's a huge problem. Another thing that I see, so the 20% business income deduction, you have to really be careful because there's a lot of things that are not included in that income deduction. So people make huge mistakes there by including things in that they really shouldn't. So
Mhm. All right, so I love it. This information I could just, have you on a podcast, because we have Media Giant Productions is lucky to have the best accounting, financial team, tax strategists in the world, and we're lucky.
awesome.
And that's
Woo!
the and we're connected to everybody. So that's why you gotta become part of that media giant family. If you start an LLC, how easy is it to switch to an S corp later on? Because here's the thing: people buy in on certain things. They say, "Oh, I never can elect myself and change."
Oh, sure you can. Yes, you can. Now, be aware that after you do it so many times, you can't just keep changing back and forth, back and forth. The IRS will say, hold on, wait a minute. If you're switching back and forth from LLC to S Corp, C Corp, back and forth, you don't know, they're going to be like, hold on. This business owner obviously does not know how to run this business the right way. They don't understand the structure of their business, and they obviously have not been advised in the correct way, which I see this a lot. The IRS will say, hold on, they will suspend you from making any elections for 5 years. They can do that too. So be careful on that election, the S Corp election. You don't want to do it too many times. Make sure when you fill out that 8832, it's the right one. You
Mhm.
don't want to make it at the wrong time again.
All right. Well, I really enjoyed this conversation. What think are we missing when talking about the difference between an LLC and an S corp from this conversation? Because such valuable information.
Yes, it is. Good stuff. Good stuff.
All right. Where can people go right now? I think also if you're a business owner and you don't have your own bookkeeping, they do bookkeeping at Shyrell's Taxes. They do everything. That's what's awesome.
Bookkeeping, accounting, business setup formation. We do dissolutions, all kind of good stuff here. You name it, we do it.
And the best place to go?
Shyrell's Tax LLC.com.
All right. That was a special simulcast of the Neil Haley Show and the Shyrell's Tax Podcast.